a little video kind of explaining exactly
Okay.
what you guys can offer. That'd be great.
All right, so I'm on camera. Good, yeah. So, when we approach it on the commercial side, we're looking at, we do owner-occupied real estate, we do investment real estate. What's the difference? Well, owner-occupied real estate would be Joe's Auto Service is buying a building, and they're gonna operate Joe's Auto Service out of it. So it's a commercial purpose, it's a business purpose, and they're operating out of it. Investment real estate is what you're doing. You're purchasing properties for investment purposes. You're not going to occupy them. You're going to rent them out to tenants, and they are going to occupy them. Also, like a strip plaza would be the same thing. That's more of a commercial use as opposed to a residential property. It's a residential rental property versus a commercial rental property. But we look at them in much the same way. The difference is when you're getting into what we would consider investment real estate is we typically are going to want a little bit more money down as opposed to owner-occupied.
To investment real estate?
Yeah.
Okay.
Yeah, because it's a different risk parameter for the bank. In an owner-occupied, the source of the payment is coming from the owner themselves, whom we know and who has given us financial information, so we're dealing directly. When you're dealing on investment real estate, the cash flow to pay the loan is coming from the people that are renting or leasing the property,
Right.
whom we don't know and whom have no obligation to the bank. You would have the obligation to the bank, so it's kind of a third party. It's one party removed, and therefore it's a little bit different risk parameter for the bank. So that's where the bank likes to see a little bit higher percentage down. So whereas on owner-occupied, typically we're looking at 20% down on a conventional loan. On investment real estate, we usually want 25% down.
Does that change at all with like 15 or 30-year mortgage or anything?
That actually gets into another point. So that's
Okay.
how much we put down.
Okay.
But also there's differences on the commercial side as to how we structure. So it's not like residential lending. Most of our loans are going to be maximum of about a 15-year amortization, unless it was a very large dollar transaction, over $500,000. So 15-year amortization, and typically a 5-year term, meaning that we're gonna price that on a fixed rate for 5 years, and 5 years but the payment schedule will be based on 15.
Mm-hmm.
But after 5 years, that loan's going to have what we call a balloon. The loan is essentially going to come due. Now, what typically happens at that point in time is, assuming the customer's made their payments and everything, and you want to continue to own the property, you reapply at that time, and we look to renew the terms for another 5 years. Or you could pay us off too, and some customers do. So that's
Right, because that could be a cheaper route, obviously, than
right,
waiting.
Right, yeah. So it just depends on the situation. But typically on investment real estate, on the commercial side, we're not going to go much beyond that 15-year amortization, and we're also going to want to see that balloon. And that's just what helps the bank to kind of manage the risk of that transaction, because those loans are all held by the bank. They're not sold on a secondary market. And Jay can talk to you a little bit about that and how things on the residential side are structured differently and can have a lot longer terms. And one of the reasons is because they can sell that loan if it's packaged properly on a secondary market.
So it seems like it's more liquid, in a sense.
On the residential side, yes,
Right.
yes. So that's kind of a basics about the commercial side and how we handle that. If you're buying a property and you're titling it to your holding company, your LLC, you kind of have to finance it commercially. Not just with chemical, but with any bank, because at that point, you're lending to a commercial entity. You're not lending to an individual. Jay lends to individuals. So maybe with that,
Okay.
let me transition over to Jay, and he can kind of explain how they do things.
I was gonna ask you one more thing with,
Sell the house.
I can't remember, so I think someone told me if it's 4 doors, it's still residential until you get the 6 doors of commercial? Is that right, with like apartment complexes?
Every lender kind of has a dividing line of where they say, hey, if it's over X number of units, we can't do it residentially. I think
4.
ours is 4.
That's
Yeah.
pretty standard.
Okay,
And we're
Okay.
talking single-family units, you know, like the fourplex, the duplex, anything over 4 units, we'd have to go commercially.
Okay,
Residentially-
this is Jay.
Oh, sorry, hello, I don't know if you got me on there.
what's your brother's name?
No, this is just a video. It's not, yeah, it's not Facebook Live. Josh.
Josh, okay.
Yeah, he's in
Hello,
Dallas.
Josh.
He's my older brother.
We're
Yeah.
gonna be on at 6
I
o'clock.
hope he's not a Cowboys.
No, he's from here. He went to Ohio State.
That's good. But, so yeah, for me, it's 1 to 4. Single-family
Okay.
units can be, like you have a bunch of single-family rentals now, same thing, up to 4 units. One of the differences though, is, as Dan kind of touched on it, on the residential side, it can't be in a, commercial or business name, it's gotta be an individual. So like
Right.
one of you or however you guys are set up, whoever would be the appropriate person to, it could be more, it could be, a couple of you or whatever, it doesn't have to be, just one, but that would be one of the differences. Now, I have seen where we've done something like this, and then later on after the fact, the owner got a new deed made, referencing their commercial side of things.
Mm-hmm.
You could do that, but I mean, that's about the only thing. So down payment wise, on a single family unit, investment property, the minimum's 15. Anything 2 to 4 is 25 as far as a percent down. And as Dan also mentioned, we can do 15, 20, 30, you can stretch it out, and there's no penalty to pay early, anything like that. So just a straightforward mortgage loan.
Okay, how have you seen, I guess, investors in the past be successful? Like, I know a lot of people start with single family. Like, how do they usually make that successful leap to get, bigger apartment complexes and whatnot?
Yeah, I've run into a few people. Well, I don't know, maybe a few different ways, to start out, maybe they have the liquidity to get going, and then you can take cash out on an investment property. Let's say you buy a property and you buy it outright, you could potentially pull cash out of it. Now, a lot of times there's like a 6-month waiting period, like you couldn't buy it and then take cash out right away. Typically, they don't like that. But after 6 months, you can pull typically 70% of the value out on a cash out refi investment property. So I've seen people do that. And I've seen them borrow against other things too, like maybe their primary residence, they had some equity and they got a line of credit and they used that to buy investment, and they ended up paying off the line of credit and it's using it again, that type of thing. So I don't know that there's any set way, but they all seem to follow some sort of that path.
Because I was thinking if, on average, a lot of our houses are, say, like, valued at, like, say, $20,000. Maybe if we just did, like, 2 of them, so $40,000, but you're saying, like, 75%. So we couldn't get, exactly $40,000, but
No, you wouldn't be able to. Now, that would have to be commercial as well, because I couldn't do like a blanket of more than one, property. It would have to be each one on its own, if that makes sense. You might be able to.
Yes, yeah, we can do that on the commercial side, but yeah, on residential, it's always gonna be one property with one loan.
So maybe a couple ways out of the gate would be, is there enough equity combined to be able to pay cash for the next one, or do you wanna borrow some money for down payments? And then I would come
Right.
through and do the residential mortgage, that type of thing, so, there's a few ways.
So if we have 8 properties that are all paid for, had them for several years now, can maybe use one for another residential, single family that's a little more expensive,
Yeah,
and then use a couple for a commercial property. Do something like
potentially, yeah,
that.
yep.
I found that a lot of banks don't use loans for like single families that are 50,000 and below.
We don't have any
Does that sound
minimums.
about right? What's that?
No minimum.
No minimum, okay.
I've done some $15,000 loans. I don't go looking for them, but,
Really?
when they come.
They still come about, huh?
Yeah, so.
You know what I mean though? Huntington and Chase are usually.
Yes, no, I know, we may be, I can't say this for sure, but we may be, or there's only a few that will do, no minimum, like a lot of them have like a $40,000-$50,000 minimum where they won't lend any
Right.
lower than that. We do not, so.
Man, what would the mortgage be on a $15,000 house?
Not a lot, not a lot,
Wow.
you would hope, yeah.
Yeah.
So,
Hopefully you don't take that out 30 years.
right. Well, you could, sometimes people do that and then they just pay it off early.
Yeah,
I'm gonna set it up for 30, but I'm gonna make a 15-year, I'm gonna make a payment that's gonna pay it off in 10 or 5 or 7 or whatever years you wanna target, And, so, there's a few different ways to go. I guess it just depends on what your goals are, what you guys are trying to do.
Yeah, anything like that, I think we'd obviously pay cash, but wow, that's interesting.
Yeah, it is.
I'm sure that doesn't happen often. It's like-
In fact, last week I had somebody that, trying to remember what the situation was. They were in a situation where they had to refinance, and I sent them to the branch just to get an equity loan because they owed under 10, and my fees for a regular mortgage are pretty set. It's about $3,000 per deal, and when you owe less than 10 and your fees are 3, that's not really. I talked them out of it. I just said, hey, why don't we go through the branch and get an equity loan, because the equity rates are not necessarily fixed, but the fees are really low, maybe a few $100 or something like that. So that's a whole nother option, where if you could pull some money out with an equity line, or an equity loan, there's that as well, so.
Yeah, I was talking to my buddy Nathan Bibb. He does investment properties too. He said he had spoken to you guys as well. If
Okay.
you remember him,
Okay, I don't remember,
might have been a year or so ago. But
okay, I don't remember,
he's from Poland, but he does investment properties too.
okay, I probably did, I talked to so many people.
He's a younger guy,
I think I met him
he's like mid 30s.
a year or so ago. Did he own a property on Midlothian?
He lives in Poland, but I don't. He might, or he was helping an investor or something. I'm not sure.
I could be thinking of someone else. But, Jay and I talked to an awful lot of people, so
Right.
if it was a year ago, that's
I don't remember
sometimes what you had for breakfast.
Yeah, I don't even know
Right.
what color socks I have on right now. So,
Yeah.
Do you guys know Roland Gosney?
yeah,
In town?
I do.
Okay, I know him really
I've met
well.
him before, he's a realtor.
Yeah,
Right.
Yeah.
I've done some deals with him.
Because he's my buddy before he kind of was doing a bunch of investment properties, but he's buying up all like Columbiana. It seems like all the downtown area there.
Wow,
If you
okay.
guys have talked to him about that, but yeah, I like to trust realtors that actually invest as well,
Right.
Because
Yeah.
you kind of know they're drinking
Yeah.
the Kool-Aid as well.
They've
Yeah.
done it.
Yeah,
But
yeah, it seems like he's got a lot going on. Last I saw him, he's driving a Charger, it's all
right,
with his stuff, so you can't
Exactly.
miss him.
right.
So,
That's funny.
yeah.